am Moumita. In today's episode, I will be talking about the important economic and financial indicators which were released last week. There are four monetary policy decisions and nine indicators to discuss today. Let us begin. Japan monetary policy. The Bank of Japan maintained a status quo on its monetary policy. The short term rate is currently minus 0.1%. The inflation rate in Japan also lies below 1%. The rise in the fuel and the commodity prices may lead to a rise in the inflation. But the bank expects the impact to be short lived and that inflation is unlikely to be above 2% levels. 2% is a comfortable number for the bank. So the bank will continue to provide the monetary policy support to help the economy grow. China monetary policy. The People's Bank of China was expected to cut its policy rates in the meeting held last week. However, it did not. It may be possible that the producer and the consumer prices number, which were released last week, showed a month on month rise in the prices. So the bank is treating with caution. But the bank has reaffirmed to lend the 1 year medium term facility loans to the financial institutions. This was announced in the previous monetary policy meeting. The support amounts to around 200 billion yuan. UK monetary policy. The Bank of England raised its policy again in the March meeting. 8 out of the 9 members voted for the policy rate hike. The policy rate currently stands at 0.75%. Will the bank continue to raise rates further? It may have to. UK is a net energy exporter. It means that the crisis in Ukraine will lead to higher inflation in England. The bank has revised its inflation expectation numbers. Previously, the bank had anticipated that the inflation number would peak in April and the number would be around 7.25%. Now it is factoring in an 8% number in the next quarter and even higher numbers in the next few months. US monetary policy. The Federal Reserve increased its policy rates by 25 basis points. This is the first rate hike in 4 years. The Fed has hinted at 7 more rate hikes in 2022 to tame inflation. Inflation has been high and rising in the US for most part of last year, but the policymakers insisted that the numbers are transient and they wanted to wait. However, inflation did not come down and it kept on rising. The US may have waited for a bit too long. Now the situation in Ukraine is likely to push up the prices further. The Fed has revised up its CPI inflation projection to 4.3% from 2.6% levels. The bank wants to keep inflation anchored at around 2% levels. Now moving to the 9 indicators which were released last week. In number 9, China retail sales. The retail sales number in China grew by more than 5% in the months of January and February. This is a year-on-year growth number. The online sales have been high during this time. Two reasons: the Lunar New Year and the Winter Olympics have been keeping the retail sales numbers high. In number 8, China industrial production. Industrial production numbers for the month of January and February also expanded. This was led by a growth in the high-tech manufacturing sector. Some of the segments in the high-tech manufacturing sector which reported high growth numbers were new energy vehicles, industrial robots, and solar battery. In number 7, Euro area industrial production. The Euro area industrial production numbers came in for the month of January. The month-on-month growth was flat. The production of non-durable goods increased. However, the production of intermediate goods, energy, and capital goods reported a fall. Among the countries, while Germany and France reported modest growth, Italy was a big drag. Growth in Spain was flat. In number 6, US producer prices. The producer prices number for the month of February came in last week. The numbers increased, it is a double-digit number now. On a month on month basis, the index was up by 0.8%. Most of the rise has been due to higher energy prices. Core PPI, which is PPI excluding food and energy, is also rising. The numbers are likely to rise further in the next month due to the high crude oil prices during the beginning of March. In number 5, US retail sales. The retail sales number for February was released last week. The retail sales number grew moderately. There was a rise in spending on clothing, sporting goods, musical instruments, books, restaurant services. The consumption of household goods and appliances was, however, lower. There was a fall in the online sales. The spending on health and personal care was also lower. The January number has, however, been revised up. In number 4, US industrial production. The US industrial production number came in for the month of February. The number grew in line with expectation. The growth was supported by a strong manufacturing sector growth. Most of the industry segments reported growth except for the motor vehicles. While the supply chain issues were starting to get resolved, the war by Russia and the sudden increase in the coronavirus numbers in China have created fresh supply side problems. This is affecting the motor vehicle industry. Apart from the industrial production, the capacity utilization data for February was also released last week. The February number showed that there is a slight improvement in the month of February. The capacity utilization implies how much of the capacity is being used. An improvement in these numbers means that there is an improvement in the demand. In number 3, India trade deficit. The year on year growth numbers for both exports and imports remain high in the month of February. The high crude oil prices has been supporting these numbers. Apart from that, the engineering and chemical exports grew in the month of February. Pharmaceutical exports, however, fell. Within imports, the gold import was down, but import of electronic goods was up. Cumulatively, for the from April 2021 to February 2022, exports stand at $375 billion and imports stand at $551 billion. In number 2, India WPI. The wholesale price inflation increased in the month of February. Last month, that is in the month of January, the inflation number had eased slightly. The February number was high because of higher fuel and manufactured good inflation. These two components have a high weightage in the WPI inflation basket. The rising crude and commodity prices are pushing up the numbers, and it is likely to remain high even in the next few months as well. In number 1, India CPI. Inflation for the month of February was slightly above 6%. The RBI had initially anticipated the inflation number to have peaked in January. However, that did not play out. There are two parts of inflation which is leading to the rise. One is the food inflation. Again, inflation is a year on year growth number. Since the numbers were very low last year of February, the base is very low. This is leading to a high food inflation number. On the other hand, core inflation also continues to remain high. There was a rise in the prices of clothing, footwear, and household goods and appliances. What is happening to the fuel index? On a month on month basis, the fuel index is also up. However, the full impact of the rise in international crude oil prices may not yet be visible in the numbers and is likely to be higher in the next few months. Given this, the RBI has said that it will review its inflation projections due to the ongoing crisis in Ukraine. That is all for now. Thank you for listening. I am Moumita. Bye bye.